This morning on BRN Retirement, improving financial wellness, a closer look at student loan matching programs, part one of our conversation. And joining me now to discuss this is Danielle Villar of SS&C Technologies and Michelle Tran of Summer. Danielle, so great to see you again. Michelle, it's great to meet you.
Thank you.
Thanks
Good
for
to see
having
you.
us.
Yeah, it's great to see you guys. And Michelle, I want to start with you because we're talking about student loans and in particular student loan matching programs. Can you give us the lay of the land and more importantly, how impactful are student loans and student loan balances today?
Yeah, so student loans is it's definitely one of the bigger issues that's impacting financial wellness across the board. So you have a sense of the actual numbers behind the scenes. There's around 1.75, I think it might be 1.78 by now, creeping up to 1.8 trillion dollars of student debt that's held by over 45 million Americans today. It is the second largest category of debt, consumer debt, behind mortgages. And as you think about the interest rates today, student debt is also hit by high interest rates. You're looking at 6.5, creeping up to 7% in terms of undergraduate interest on undergraduate loans, and then 9% on graduate loans. So this is a big problem that you can think about as you're graduating from college, you're a newer entrant into the market, you're coming out, you have about 70% of those graduating coming out with some amount of student debt. What we're seeing on average right now is those who are graduating are walking into their first jobs with around $40,000 of student debt. And what that really translates to is they're paying around $400 a month and paying back their student loans. As you can imagine, that has a big impact on someone that, depending on their income, their ability to, kind of cost of living, the affordability of homes. So it's a really big issue that's impacting Americans today.
Yeah, and Danielle, great to see you again. Michelle makes, I mean, there are a lot of headwinds, I would think, to financial wellness. Just hearing the numbers, 1.8 trillion, $40,000 on average. Danielle, this has got to create financial wellness headwinds.
Absolutely. Yep. So student loans obviously consume a large portion of individuals' finances, like Michelle said, which make it extremely challenging for individuals to save for emergencies, invest for their future, or even cover those day-to-day expenses. As we know, about half of Americans are living paycheck to paycheck. And Michelle just mentioned that stat about all of the individuals coming out of college graduating with that student loan debt. So this can really lead to increased financial stress. It can impact credit scores, and it's contributing to individuals putting off marriages, having kids, and in some circumstances, even for the baby boomers, it's impacting retirement as well. Not to mention kind of that emotional toll and all of the stress that this puts on the borrowers. So we really need programs to help educate and assist Americans with this problem today.
Yeah, Michelle, I mean, obviously financial wellness, it's one of those buzzwords in our industry that's getting talked about a lot. Let's talk about the typical ways that people can repay their student loans. How do they do that today? Is it simply stroking a check, or maybe they don't do checks anymore? It's automatic deposit or automatic draft?
Yeah, there's definitely, the digital ways to pay back student loans. I don't think there's I mean, I'm sure they do take paper checks, but that's probably few and far between. What we are seeing is that when we think about the student loan payment in general, how do we help how do we help individuals really reduce that student loan payment? And this is one area where we are focused as a firm and helping individuals and companies offer these programs to their employees to find ways to really reduce that student loan debt. Because to Danielle's point, that has a huge impact on financial wellness, on stress, can even affect you physically, right? If you have that mental stress with financial wellness and this huge debt amount. And so there's a couple different ways. One is there are many federal programs that will help reduce that debt. And so they're called income driven repayment programs, or they're called income based repayment programs, IDR or IBR, some acronyms just to keep an eye out for or ears out for. And these will help you reduce your monthly debt amount, and then it will also reduce your overall debt in general. And these are programs that can be offered by employers that access free federal government money. Um, that's one way. We also see employers taking a more active stance where they're saying, look, we really care about our employees. We really want to bring on the best employees. We want to retain the great employees. So we're going to put in programs and budgets to support them by paying down student loans specifically. So what that means is, hey, you've been here for a year. We'll pay $100 into your student loans directly. But you've been here for 2 years. Now it's $200. Now 3 years. Now it's $300. Can you imagine in some industries where this is really important? Medical industries, nurses that all have, graduate degrees, and maybe their income level isn't so high. So these programs are really big for them in order to think about holding on to really great employees. And there's also now, and we'll get to it later, but Secure Act 2.0 has offered another way as we think about helping employees think about financial wellness. So not necessarily directly paying down their student loans, but allowing folks to pay down student loans, but also to start saving for retirement, which is a really great mechanism as you think about financial wellness and continuing to build wealth.
Yeah, Danielle, I consider you my financial wellness guru, Danielle. I just want you to know that. And I want to ask, just in general, we're going to talk about, as Michelle said, we're going to talk about student loan matching in our second part of our discussion. But do current financial wellness tools take into account student loans? Is it ingrained into the algorithm, into the programming, or is it more, hey, this is a liability and I've got to pay off my liability at some point when I retire?
Certainly getting there with, Michelle just mentioned Secure Act 2.0, and more employers are looking for student loan benefits to help attract and retain. And I think, the mindset for financial wellness is that we really want it to be holistic. Americans in general kind of think of their finances incredibly siloed. It's just kind of the way we've always done it, just because of how we manage the different institutions. If you think about it, we kind of compartmentalize short-term and long-term debts, savings, very all separate. And our goal at SS&C is to help provide really a comprehensive approach to managing your money. Sometimes I think about it as like an analysis paralysis, where you've got so much information and you're not really sure what to do next, so you do nothing. So you've got all of this crazy increased stress. So what we try to do is provide clarity through education, help to simplify really complex financial decisions, allowing the individuals to take action confidently, and ultimately reducing stress. So for borrowers with student loans or goals for future college savings, these tools can really help offer insights in how to allocate their income effectively. So we're definitely getting there. We recently built a new microsite to focus specifically on student loans, just giving everything that's going on in the industry. We thought it was really important to be able to provide that for our clients. And so in particular, we like to help people find the money to save, because that's the first problem, is how do I, be able to pay down these debts? And then secondly, we help people decipher the really complicated programs. So Michelle mentioned a lot of them. That's great that they exist, but what are they? How do I get involved? Do I need to do something? Is it employer focused? So we help people decipher those. We help people, do things like create budgets where they can find, some additional money to pay down those student loans. Tracking expenses is another one that is something that we have a really unique feature available, which allows users to link accounts. So we can analyze spending and review habits to say, maybe I shouldn't be spending that extra $6 on that Starbucks coffee I don't need, and put that towards my savings. There's a number of college planning tools that exist to help identify, how much money do I need to save and kind of project into the future. I have 2 little ones, so I know that very well. That's something that we all should be thinking about. And then as well as just kind of that traditional education. So articles, videos, really just kind of explaining how these programs exist and then helping people to implement them.
Well, ladies, we're going to have to leave it there. In tomorrow's conversation, We're going to talk about Secure 2.0. Michelle teed that up nicely for us. And we'll talk about student loan matching programs, what they're all about and how they can be implemented. Michelle, Danielle, great to see you. And we look forward to catching up with you again tomorrow morning.
Thank you.
Thanks, Danielle and Michelle. Really appreciate your perspective, and we look forward to picking up the conversation tomorrow morning. And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place. Details, of course, at our website. And as I said, we're back again tomorrow with part 2 of our conversation on student loan matching programs. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.